This is a daily chart of gold. And as you can see, it's formed this triangle here. It hit a high here in May. It was a slightly higher high than April. But really, we've been going sideways for a couple of months. Now, it remains to be seen what happens here. I believe that we're gearing up for a move higher. Take a look at the weekly chart. We blasted out above $2,000 an ounce, and we had a number of weeks straight up. And now we've had a few months of sideways action. It's forming this triangle again. Let's see what happens next. I can tell you from boots on the ground experience that a lot of people are worried about this consolidation. Hello, this is Mike Preston at New Harbor Financial Group. It is Wednesday, June 26, 2024. Thanks for tuning in to our periodic update. We're here to share data and insight. We're always here to help. Please do subscribe to the channel, like the video, and reach out to us either through comments. We do read the comments, or in the bio below, there's a direct link on how you can chat with us. We're happy to chat with you, whether or not you're a client. We're happy to give you our opinion. There's no obligation. So please, that's what we're here for. Again, that's our purpose. A few weeks ago, I talked about the gold standard and the fact that we left the gold standard for the final time in 1971. I talked about how that affected the world, how that affected the economic system, and how that distorted the system, and frankly, how it allowed central bankers to run amok, and how it opened the gates of inflation. I'll share about what our predictions are for the future and whether we think it was a mistake. Also, I want to give a quick update on gold and silver, which have broken out and are in a multi-week consolidation. I know a lot of people that are in gold and silver and in miners are nervous. I want to talk a little bit about that and give you our perspective. A few questions that I think are pretty important to talk about here. Do we think that was a mistake to drop the gold standard? Absolutely. I think that dropping the gold standard was a mistake. With you, I think we're completely off the reservation. Is the gold standard coming back? I don't think there's any chance that it's coming back. That's the bottom line conclusion. I think that central bankers have learned that they can have some kind of, at least for now, fountain of youth, that there is some perpetual energy machine, that we can bail out just about every mistake, and there is no limit. That's what it seems like based on the charts and some of the data that I'll share in just a minute. Doesn't seem like there's going to be any limit. In fact, I will share some charts now to support that conclusion. So the first chart I want to share basically shows the U.S. public debt percent change divided by the money supply, M2. You can see here in 1971, when we went completely off the gold standard, when Richard Nixon passed this into law, that we went on a one-way street of the debt increasing. And I've got a chart in just a minute that shows the actual debt, but this shows the percent change. And this shows the percent change compared to the M1 money supply percent change. Both of these have certainly trended upwards. And during COVID, we had the biggest increase in money supply change ever. And the public debt has only increased. Take a look at the actual federal debt. Going back here, you can see that in 1970, 1975, the federal debt started to increase pretty rapidly. The recessions are denoted here in gray. Certainly, after each of the last few recessions, the slope of the total federal debt has increased. It's my belief that the game kind of changed back in the late 90s when we had the tech crash. In fact, Alan Greenspan was pumping the system full of liquidity because he was afraid of Y2K. A lot of you might remember the year 2000. That exacerbated the tech bubble. A lot of people remember the worries during that time. We were searching for programmers. We were afraid the world was going to end because computer programming didn't know how to deal with the change of the clock. Well, it turned out to be a non-event, but we certainly exacerbated, I think, some of the extremes that we saw in the tech bubble. And during that time, we saw an 83% drop in the NASDAQ. Well, we reinflated after that and created the housing bubble. That created a recession that actually lasted a relatively long period of time. After that, it was completely simulation mode, in my opinion, because we had TARP, QE 1, 2, 3, and 4, and really it's never stopped. We had this drop during COVID, this very, very blip of a recession, but then we had $7 trillion worth of fiscal and monetary stimulus thrown into the mix. $7 trillion. That's more inflation adjusted than it cost to win World War II in this country. And so you can see now we're up at around $34 trillion in debt. And this is increasing by $3 trillion a year, 2.5 or so, close to $3 trillion per year. And that's before a recession. That's before an economic crash. That's before a crisis. I can only imagine what's going to happen in a crisis. I believe within a couple of years, we'll be looking at $40 trillion in total debt. And if we see a crisis or a recession in the next couple of years, I think we'll very quickly hit 50 trillion. So folks, there is no plan B. Take a look at the total debt as a percentage of gross domestic product, because a lot of people say, well, geez, you really can't just look at debt. You've got to look at productivity. Well, the thing about GDP is that it's pretty much pinned as high as it can be, because corporate profit margins are around 11 to 12%. They're only that high because of the deficit spending of the government. And so there's a real risk that GDP goes down if profit margins revert to a long-term mean. Well, take a look at what happened back here. 1970, we were somewhere around 30%, and it looks like it declined a little bit throughout the 70s. For the most part, it was flat. And then once we hit the first big recession in the 80s, and the Reagan administration came in right about here as well, and we were dealing with inflation. Paul Volcker broke the back of inflation. He was a great Fed president, but we learned to apply monetary stimulus to every problem. Alan Greenspan in 1987 was just a few weeks on the job when the crash happened, Black Monday, and he immediately applied stimulus to the markets, and that really never stopped. And you can see that during every recession here, we had a little bit of an increase, not so much in the tech crash, but after going sideways for a while, we went vertically up thereafter. And now we're at about 120 something percent debt divided by GDP. In the longer period of history, any nation that's approached 100% or more debt to GDP has had trouble recovering from that situation. It's because of these charts that I think it's very unlikely that we return to the gold standard absent some kind of pain. I really don't think we're going to return to any type of gold standard absent some kind of pain. I really don't think that's going to happen. It's just not in human nature. Our conclusion, gold standard, it was a mistake to come off of it. It let the floodgates open. It allowed bad behavior. It allowed us to press the easy button every time something happened. And that's not a good thing overall. And I don't think we're going to return to the gold standard because it would be too painful. It'd be too painful. We'd have to admit that the whole monetary experiment was a mistake. It would be very painful. We're going to have to admit that the debt got out of hand. We're going to have to pay the piper. We're going to have to face austerity. Literally, we're going to have a reduction of the standard of living of some amount, 30, 40, 50%, who knows? That's going to be permanent or relatively permanent. That's what we're dealing with here. So I don't think there's any way in the world that the Fed governors or the politicians have the stomach to return to a gold standard. I think maybe other countries will do that for us. If the BRICS launch a currency that's attached to gold, I think the world will be watching and perhaps demand that America does the same. But my real prediction is that we go through some kind of asset price collapse and or crisis, and that we introduce some kind of alternative payment system, probably some kind of digital currency. That digital currency could be attached to some kind of gold standard. I doubt it, because I think the policymakers like the freedom. If the crisis is deep enough, it's possible that there could be public demand, a public outcry to link to some kind of gold standard. But I would imagine that would be a severe recession / depression, the likes of that we haven't seen since the Great Depression. Perhaps there could be some political pressure to return to a gold standard during that. But short of that, I don't really anticipate that happening. I'd like to close just by mentioning a few things about gold and silver. So let me share. This is a daily chart of gold. And as you can see, it's formed this triangle here. It hit a high here in May. It was a slightly higher high than April. But really, we've been going sideways for a couple of months. Now, it remains to be seen what happens here. I believe that we're gearing up for a move higher. Take a look at the weekly chart. We blasted out above $2,000 an ounce, and we had a number of weeks straight up. And now we've had a few months of sideways action. It's forming this triangle again. Let's see what happens next. I can tell you from boots on the ground experience that a lot of people are worried about this consolidation. I can tell you that gold bulls and gold mining bulls are very tired. It's been a long sideways consolidation. If we take a look at the monthly chart, it was a 4-year consolidation that we finally broke out of. But still, this triangle here, I believe we have an incomplete move to a high. I believe that what we're going to see is a move higher. I don't know exactly when. I believe that even if we have a head fake down below, we're going to break higher and we're going to reach around $2,500 an ounce and maybe even higher. I think a new range for gold is going to be 2,500 to 3,000. But right now it's a little bit frustrating waiting for that to happen. So this triangle is what I want you to remember. This triangle is a bullish triangle because it's compressing, and the move right before this on the weekly chart has been up. So we should see, whether it happens sooner or later, we should see gold move up out of this consolidation. Let's take a look at silver. Silver has a similar move or similar look, except instead of a triangle, it's this flag, this descending flag. So just like gold, the preceding move was up. If we break this downtrend line and move higher, this could be a very explosive move out of this flag. This would project to around $35 silver, which is presently at 29. So watch for that and just be patient. This is really testing people's resolve. This is a, what are we looking at? 1, 2, 3, 4, 5, 6 week consolidation. And it's a pretty big pullback. It's about 15+%. The same thing happened in copper. Copper pulled back around 15%. All the base metals did. Remember that the metals are volatile. They're rewarding, but volatile. They're rewarding if you stay in them and you get the right move. Overall, I wouldn't be worried. Stay with your position unless you feel like you're overexposed. If you feel like you're overexposed, you can trim into what has been some recent strength. And feel free to reach out to us to chat about that if you wish. But I really think that ultimately that move is higher. So in closing, thanks for watching. You have our conclusion on the gold standard. I don't think it's coming back unless we see a crisis that's very, very historical and unique. I don't think it will come back unless there's major political pressure to do so. So for the meantime, I think we have to let this cycle play out. I think the market is going to pop probably this year. We'll see. Valuations are not supportable. The breadth is narrowing, but we still have yet to see that final hurrah of euphoria that I think we might see soon. Gold and silver are in bullish consolidations. With gold, it's a bullish triangle. With silver, it's a bullish descending flag. Let's wait and see if we bust out higher. I think we probably will. In the meantime, if you want to chat with us, please reach out to us. There's a link in the bio below. We're happy to talk with you. Please do subscribe and like the channel, like the video. And until next time, this is Mike Preston at New Harbor Financial. Thanks for watching.